to have like your fully distributed blockchain based content, you're syncing a bunch of Chrome plugins and adding a private key and adding it to cold storage. I think I think there's a lot of very interesting use cases for the blockchain. I don't think that the UI and UX is caught up to what normal consumers would want. I mean, we see people onboarding on the Beehiiv, which is as straightforward as it gets, Web 2, and they still have dozens of questions, right? Yeah. So I think it is a little bit ahead of its time, but I think the underlying tech is pretty interesting.
Boys, welcome. Trends with Friends. Special guest today, Tyler Denk. He's surfing in Colombia. Where are you today, Tyler?
I'm in Los Angeles. I'm back in Los Angeles.
He's in Los Angeles. I am in Muskoka, Ontario. That is, we were just chasing some ducks and deer, Northern Ontario. Phil, where are you? Your basement?
I am in. Yeah, exactly. I'm in New York, man.
And JC, where are you?
Out in the woods.
I'm at the beach. I'm at the beach with the family. It's nice down here. I'm here in beautiful 7 Mile Beach, Avalon Stone Harbor, all the way at the southern tip of the Jersey Shore near Cape May.
Really could have just gone with Jersey Shore, but thanks for killing time. Don't you have to leave now? That took so long. So welcome to Trends with Friends.
You can tell he's never been here.
No one cares about the Jersey Shore. All right.
Good.
So have you ever been to Muskoka, Tyler, Phil? No.
I've never been to, nobody that spends summers up there ever invited me up there, by the way.
It's like on Golden Pond, just better. All right. So today Tyler, welcome to the show. We walk through markets. One of the topics we've always talked about, because I use Beehiiv and an investor in Beehiiv, is email and the email trend. So Phil's going to lead the discussion today. Phil, you want to start with Tyler and email? Where you want to go?
Tyler, just great to talk to you. Fascinating topic. And, this is the next iteration of Web 2, which is not only still alive, but thriving and incredible. And, the newsletter thing. So maybe just start with a little bit of backstory, how you guys did this. How'd you come up with it? And I mean, it's beautiful what you're doing. Tell us a little bit about it and how you came up with it.
I appreciate it. Yeah. So I joined Morning Brew back in 2017 as the second employee. So for any of the listeners who are unfamiliar with Morning Brew, daily business newsletter, now has a few different verticals, goes out 6 a.m. Eastern, covering the markets, business news, cultural events. And so I joined as the first engineer and really built out the website, the newsletter, the referral program, which led to a ton of growth for us. Built the ad management system to help the sales team and the copywriters, monetize the newsletters, an ad-based newsletter, and really kind of rode the success of that. It was the first time I saw that 5 people could sit in a room, press send, and print $50,000, $60,000 a day just from sponsorships, which made me wish that I was collecting emails since I was 5, 10 years old. But really, like, the power of owning an audience became like blatantly clear to me there. Fast forward, Morning Brew is a huge success story. They go on to get acquired by Business Insider in 2020, to which I just had the experience of seeing the power of email, the power of newsletters, the power of owning your audience, and then also had the fortune of building a lot of the tech and infrastructure to help scale that growth. So me and my 2 co-founders, who were 2 software engineers at Morning Brew, left to start Beehiiv, which is in a way Morning Brew in a box, but everything from hosting your website to creating content for email to the growth tools like a referral program to co-registration and then monetization, obviously. So we have premium subscriptions. You can charge your audience directly. We don't take a cut of subscription revenue. We have a boost network where you can get paid for recommending other newsletters. And then we have an ad network where we have advertisers like Netflix, HubSpot, Monday.com, Better Health, Betterment, sponsoring newsletters. So you can monetize without actually having the direct relationship with the advertiser, and really just put your monetization on autopilot.
Hey, Tyler, and we're seed investors. So Tyler, I forget how we met. Did you cold call me or did we get connected by somebody?
Yeah. Was it Brian, right?
No, you know who it was? It was from, he's going to kill me now that I brought this up.
I'm pretty sure it's Brian.
No, from Bullish. It was from Bullish. What's his name?
Yeah, his name's Brian.
Oh, no. Now he's going to double kill me. It's not Brian. Oh, it is Brian Hanley. Sorry. Okay. So, and it was so funny. Brian, guys, this goes to JC. Brian's like a hustler. He was at, whatchamacallit?
He's an investor too, right?
Yeah, and I told him,
He's involved with Beehiiv.
I said, Brian, he was like, Howard, you should do this. And I said, Brian, I'm going to do it, but make sure you invest as well. Brian was like, didn't know. That was kind of Brian's first personal investment.
Yeah.
So it's
what's funny is how we actually got connected is, I guess he sent the text. I mean, I didn't even know Brian that well, but you texted me back and you're like, hey, let's do Sunday, 7 a.m. And I didn't know you at the time. And I also, the backstory was, invested in Robinhood, co-founded StockTwits. So I was like, this guy is a fintech investor. He's not even going to invest in us anyway. We're like peak seed raise where, 9 out of 10 people say no. And you're asking to meet at 7 a.m. on a Sunday. And I was like, this fucking guy. And so I was in LA. I took the call. Went well. And then you and Gary were like, why don't you come down to San Diego and meet us the next week? I was living in Venice for the summer, didn't have a car. So I rented a Ford Mustang, drove down to you guys. And to which I was also like, I don't think these guys are even interested in this space. I'm just wasting my time buying rental cars, driving down to San Diego. And obviously that ended up working out. But
I think JC, you'll love these backstories because JC knows me well and loves seed, like just fascinated by this. We've lost some money together, so we know what it's like. We beat you up pretty hard. I remember you came down, Substack had already raised, and we have this whole shtick that we do that was like, well, I mean, we loved it. I know, and I wanted to move my email over because I like to use the product before. I don't want to promote stuff I'm not using. And it was a tough move, right? Because I had all this history on WordPress. And then I think what made you such a smart founder is the world was pretty hot. Like COVID was happening, but things were getting done very quickly. And you kind of listened to us about pricing and how to give yourself optionality. Do you remember what was going through your head? Because we're not lowballers, but we don't chase deals. So what were you thinking about on your side of the negotiation?
Yeah. I mean, it was also an interesting time in the industry and space that we operate in. So you mentioned Substack was probably, and still is, like one of the more popular players in the space. I think they had just raised $65 million at a $650 million valuation. There's the legacy email players, so MailChimp, Constant Contact, ActiveCampaign, like massive multi-billion-dollar businesses. MailChimp sold for $12 billion. So like there's established players in the space. Substack was the leader of kind of like this new wave. And then Facebook just launched Bulletin, which was their attempt to get involved in email newsletters. Twitter just acquired Revue. So now we have big tech getting into the email newsletter space. It was, for as much as strong as a thesis as I had around how we were going to be able to carve out market share and build this business, I understand why most investors passed at that time. It was very competitive and very crowded. So I don't know. It's funny to look back now, right? Revue doesn't exist at Twitter. Facebook killed off Bulletin. Substack is still at that same valuation. And MailChimp and whatever just kind of integrating into it. So it's played out in our favor, but at the time, like anything but this was probably the expectation.
So flash forward to today, guys. Phil believes in this. Obviously, JC does too. He's built his own system out for all-star charts. We can chat about that. But what really and by the way, also Fred Wilson, kind of the master, had moved over to decentralized, like Ghost and Mirror. So there was competition from every angle. Klaviyo hadn't yet been a public company, bloody. And I think the lesson is build a product that people will use. And I think the other lesson from Beehiiv that I want to share is the cap table does matter. If you're going to make money, negotiating at the very beginning and maximizing for price is probably not the best idea. So Tyler got himself going, which is key. Now we flash forward today. You're well capitalized. You just raised money from NEA, multi-$100 million valuation, with a 7-figure annual, recurring revenue, 8-figure recurring revenue here or there. I think 7-figure recurring revenue.
Yeah, we're at 1.2, 1.3 million a month right now.
And a simple business plan. Why do you think, like going back, because you're young, why didn't Twitter do the boost idea? Like I always thought, like I'm the DJ. Like shouldn't I wake up every day and Twitter
Didn't they buy somebody and then just totally fuck it up?
Yeah, we actually hired a lot of people from Revue, which is they were based in the Netherlands, and that's the email company that acquired. I think you could probably spend multiple podcasts just talking about like the what ifs of Twitter. They bought Vine. They've bought a bunch of these other tech platforms over the past 10 years. They have a finger on the pulse of everything going on in pop culture, media, like up-to-date real-time news. There's a lot of very smart people that have built huge audiences on the platform, and their inability to monetize is, I have theories from sitting on the outside, but I feel like you could talk for hours about the missed opportunity of Twitter.
Yeah, and I don't mean to do that, but the most native would have been Boost, right? I wake up every day, I'm a DJ, I'm going to do 15, 20 tweets in my prime. Maybe I do 5 to 10 sometimes now, but generally I don't use a mobile. Shouldn't I have been served like Boost at the beginning of the day saying, Howard, your ads today, your post today will be sponsored by Netflix, right? Instead of having sponsored ads, the ad should have been in my tweet because I work with. Is it not the same thing?
If you're relating to like our Boost network, it's just being able to promote other newsletters, other publishers, other content creators. Yeah, I mean, it makes sense. They have the network effects.
Yeah. Anyways, congrats on Boost. Boost is working well. JC, it's a really cool idea where I wake up and I see who wants to buy ads in my newsletter, and I can decide if I do or not. So they're kind of they're turning me into a DJ that allows me to promote brands that I like.
And a lot of, I think, if you pull on the thread of what has made us successful, a lot of those insights kind of came from what worked at Morning Brew. So a lot of the competition were either pure software guys who just had the idea of building some email platform. But like we kind of come from the background of like, we built Morning Brew from when I was there, 100,000 subscribers to 3.5 million. We tried every growth idea under the sun. We built our own dashboards. We optimized everything. And so Boost really just came from early days of Morning Brew. We would just find other newsletters with a similar but not competing audience, and we just swap with them. We'd say, you promote us, we promote you. It's like mutually beneficial. And then eventually when Morning Brew became too big, we would just pay for those newsletters to promote us. But sponsoring other email newsletters for additional email subscribers makes a ton of sense. It was one of our most cost-effective and quality acquisition channels. So like a lot of these insights and product decisions that we've made today in Beehiiv really are from a lot of the insights and experiences that we built at Morning Brew.
And a couple more questions. Sorry, Phil. One question is, you caught this tailwind that I believed in, that, first party data. Let's quickly speak to that if you can, first party data and how Facebook works versus email. And your idea always was, hey, if you have a YouTube account, you're insane not to have an email account. So we've caught this perfect storm of people that have TikTok, have YouTube, have Twitter, in my case, Twitter, not YouTube and TikTok. And I'm like, I'm the product, right? If the product's free, I'm the product. And the faster I can move as much of my audience over to email, the better. So you caught that trend as well. How do you think about that? Because you're dealing with a lot of YouTubers that come over.
Yeah. I mean, how many people have you heard that have been screwed over by Facebook, YouTube? I think even right now, people are complaining on Twitter that the algorithm changed recently and all of their posts are getting a fraction of the engagement they were getting previously. It really, emails and FMS, I guess, are like the true hedge of just owning your audience and really going deeper in that narrative. I started a personal newsletter kind of just to build in public and be a consumer of the product this year in January. Now, every time I press send, I reach 30,000 people, which is crazy. I'll make probably $50,000 to $100,000 in revenue the first half of this year, passively as like a side income thing, just to kind of like use the bells and whistles of the product and figure out where we can improve. But I've been like preaching to the choir for years now, and like me actually in the weeds building this newsletter really just reemphasizes like the power of getting in front of your audience. And I don't know. I think that anyone who is large on a TikTok, Instagram, Twitter makes like a ton of sense to be able to get their contact information, and data portability, right? It's incredibly important, especially in email. You can't grow a massive audience on TikTok and move that to Instagram, which I think a lot of people are realizing now. But you could grow a huge newsletter on Beehiiv. We do something wrong, you can move to MailChimp. If MailChimp does something wrong, you can move to another platform. But you kind of like own that contact, which is like incredibly powerful and a complete deviation from what social media is really.
Yeah, where I see it with the trend, Tyler, this is from our investment in PunchUp, which is kind of a Shopify for comedians. Comedians are probably the fastest and most exciting form of entertainers in the world right now, right? They're commanding, there's more than one Jerry Seinfeld now. And comedians on YouTube, it's not like they should stop using YouTube or TikTok, but they don't know if where their message is going to go, or if it's going to get shadow banned or curtailed by YouTube. So they're the fastest growing movers over to email. So kudos on the timing. What's your biggest concern now? Like day to day, is it deliverability? Is it like, what's the biggest problem on a day to day?
Yeah, I guess like as much as we say algorithms don't impact email, like deliverability, which is kind of owned by Gmail, Yahoo, AOL, etc., like that is kind of like the algorithm, and there's like a whole black box of deliverability. That's like an ongoing thing that I think every company that sends emails, whether small business or like large email service provider, kind of deals with best practices. Total pain in the ass for sure, but like not the biggest issue. I think now we are 75 employees. We're remote. It's like the day to day of just like ensuring that we still have the hustle of like the small 10, 15 person team continue to execute and continue to lean into the feedback we get from our users. Like what got us from 0 to 1.3 million a month in 26 months is relentless hustle and really having our finger on the pulse of what our users want and what people are complaining about on other platforms so we can build to serve them. It just gets harder and you deal with more like people problems at 75 employees. So it's kind of like the biggest day-to-day priority.
JC, any questions before we move to the market?
No, I mean, I really love the platform. I'm launching a newsletter now about wine. My wife doesn't want to hear about wine. Most of my friends don't give a shit. Nobody cares. But, my audience, through all surcharges and market participants, whenever I see anybody in person, they don't want to talk about the market. They want to talk about the wine. So, and I got a lot of things to say. I don't know if you know, Tyler, but I'm a certified sommelier and I own a winery in Napa Valley. I'm making Cabernet Sauvignon. We're on our 4th vintage now. So, I have a lot of thoughts and opinions on different wines. And, I want to make it more practical. Like nobody cares about the soils of Chablis. We want to, I want it to be something practical that people can actually use. And Beehiiv is literally the perfect platform for me to launch that newsletter. So I'm excited about it.
Yeah. Vest is actually one of our advertisers with active campaigns. If you're familiar with them, they allow you to invest into wine. But like it's something like that where I think that's like been the big shift that I think Beehiiv has played a really critical part. Is previously at Morning Brew, everyone would reach out being like, how big do I have to be to monetize? And you're kind of like at this cold start problem where you have to create content and send it for a year plus until you hit some critical mass where an advertiser would even look in your direction. But with what we built, one with Boost, you can monetize day one with 0 subscribers, or you launch your wine newsletter and 2 weeks later, we can have VinoVest advertising in your newsletter without you doing any sort of sales, and you're monetizing. You take the revenue, put it into growth, grow faster. And that flywheel is something that we really mastered at Morning Brew, but it took a lot of time and scale and engineering. And now anyone can really tap into that.
So do you think if I'm making $200 a day, if I could, like I don't advertise, I tested it with you, but you think the smart thing to do is just take that money and roll it back into more and spend it myself back on the network? Is that kind of what people are doing?
I guess it depends on like what your goals are, right? Like I think you're financially fine and don't need the $200 in your pocket day to day. So if your goal is to grow influence and have a bigger asset where when you press send, it hits 50, 75,000 people, which you can then push to stock twits or any of your investments, like I would just be going for scale and growing the audience. That's kind of how I look at it as well.
Yep. And so, I mean, we could talk about this forever. Phil, where do you want to move next?
I do have some questions, but
Okay.
and then we'll move on right to JC. Okay, so really fascinating discussion. I want to just be the audience for a minute. So all of us on this call right now are super wonky when it comes to web publishing and newsletters and email, and have been doing it for a long time. But there's people out here watching who, and this is the first comment, you're just a consumer. You don't really give a shit what kind of platform. You don't really care. It's just a beautiful platform. And so you're probably consuming newsletters and blogs every day that you don't even realize are on Beehiiv, which is actually really cool for the user. Like it's a really clean experience. It's beautiful. The advertisements are super organic. And that is just a great experience. That's just number one. Number two, question for you, Tyler. If you're watching this right now, so within the finance vertical, as a matter of fact, I have 2 more questions for you. But first one, if you're in the finance vertical, right, and you're watching this, you have a natural desire to get into content because people consume I see this, I'm involved a lot with the advisor community, and I see this so much with advisors. There's all these advisors out there, and everybody's telling them, all the marketers are telling them, hey, you got to create content. You got to bring. So if I'm an advisor or if I'm just in the finance world and I want to bring attention to myself and what I'm doing and my show people how sharp I am, what would be the first thing you would do if you were one of those guys right now? You create a Beehiiv account, and then what do you do?
Yeah, I mean, one, it's probably get your current clients, friends, family, subscribe to the newsletter, start getting feedback. But I know as a consumer who would consider an advisor, I would want my advisor to be much smarter than what I can tell from like a cold email exchange, right? And so creating content to be able to show how you think about the markets and do more analysis. I think a lot, like using Morning Brew again as an example, like they are an aggregator of news and content. And there are so many aggregators out there where I think there's like a lot of opportunities in the analysis piece. So Ben Thompson with Stratechery is like a master class of just like deep tech insights that you can't get in other newsletters because you're paying for access to get his real-time thoughts and analysis on what is happening in tech. I think I would kind of like mimic that playbook, but for finance, if I was in that space and trying to create a name for myself.
I think what Ben got right, which is correct, Phil, is FANG has gone on for longer than I think most people would have predicted. Forgetting the slang term FANG, the idea that he's the expert on Microsoft, like you wouldn't have thought, like the topic of talking about Nvidia, Microsoft over and over and over, and Google and Facebook and Apple would get monotonous, but he somehow has, obviously these companies are so big and he's worked his way up to now he interviews Satya and Tim Cook. So I think what Ben got right with Stratechery is the minutia of like doing one thing while that over and over, and he's become the master of his domain. So it is very few people that can pull off what Ben does, but his playbook is
How long ago, Howard, did you and I have lunch with Ben? I think it was in San Diego.
He spoke at Stucktoberfest. Because he spoke in Coronado at Stucktoberfest, which we're bringing back. So he flew in he doesn't do speaking engagements, I don't think, like this. But I was a fan. We speak, email. I'm a subscriber, and
it was over 10 years ago.
Yeah, it's got to be like 2015, 16. He flew into San Diego and did a fireside chat with us, but he still continues to do it. I think there's now thousands of Bens out there on Beehiiv. How many actual newsletters are there, if you can tell us?
Actively sending right now, probably approach 20,000 or so.
So there's 20,000 people. What do you think the total market is based on like the TAM for a Beehiiv? Like total active senders are there millions? Tens of millions?
You hit on the question that you asked me when we were doing diligence, and my least favorite question to answer for any sort of fundraise, because bloggers, there's tens of millions of bloggers, right? Like anyone who wants to create content, anyone on Twitter, any business, small, medium-sized business that sends emails to their clients to cut their hair. Like you can go in so many different directions. If your purpose is just to create content, to send via email to your audience, customers, whatever. So it's a really hard number to kind of pinpoint, like this is the exact market, but I think it's growing as well, right? Like we have a talent initiative where we have Arnold Schwarzenegger, Robin Arzón, like huge names that were traditionally movie stars, athletes, musicians, big on YouTube or TikTok, who are starting to see the power of email and moving over and launching newsletters as well. So the market is both larger than I think most people give it credit for and growing currently.
As I tell people on StockTwits who use Discord or something, I say, guys, I'm never going to open a Discord. But that doesn't mean I wouldn't open your email that summarizes what's happening on Discord. This is the disconnect that people have. They go, I don't want to do another platform. Email's the simplest thing. Keep your Discord, keep your YouTube. I still may never open those, but for you to summarize it so I can get your thoughts in an email, which is a product I use daily, but people still haven't connected those dots. So that's why I think the market is still way underutilized on email. Is one, obviously you are the product on Facebook, and two is you don't have to change your format. You can have an email and still be the YouTube style that you want. Just share it through email. So I think that's still the biggest market to be had.
That is like the other part of this talent initiative. I think a lot of people think of email as like legacy tech, corporate, logging into Microsoft Outlook. But when you have Arnold Schwarzenegger and Josh Richards and all of the biggest names and athletes also launching newsletters, that it's just as much as a marketing play of bringing brand awareness to newsletters as it is to Beehiiv. And the hope is that if you can see different financial advisors, different celebrities, different athletes launching newsletters that you subscribe to, if you decide to launch a newsletter, one, that's step one. And step two is when you realize that they're all using Beehiiv, that's the logical platform to choose. So it's like a cool halo effect is what we're trying to invest in with this talent initiative. And it's paying dividends right now.
So what do you guys got going on in the finance vertical? I know the StockTwits newsletters are moving over there. You got a few of the Ritholtz boys. It's a really nice, like it's a verticalization thing, whether you're structuring it that way or not. So I'm just really curious about like how you're thinking about that and what's next on this vertical. That's, something our viewers would be interested in.
Yeah, I think it's super interesting because it actually kind of goes against what you mentioned earlier when you were talking about how many consumers are receiving emails without even knowing that they are powered by Beehiiv. And so there was kind of an intentional decision that we made where I view it like Shopify versus Amazon, where Amazon has thousands of third-party sellers, but like they don't own their audience. They don't own that customer. You go through Amazon, they handle shipping, they handle billing details, and you're just receiving the product. Where Shopify, you could go to 10 different consumer websites today. You have no idea which are powered by Shopify or not. They're just the infrastructure and pipes to provide companies to launch storefronts online. And we very intentionally chose not to be aggregators. We are the Shopify of the email newsletter, where we want to power blogs, newsletters, content creation without being in your face. This is powered by Beehiiv. So it kind of contradicts your point earlier, like the benefit of saying like, this is a StockTwits newsletter. And it doesn't really matter who's under the hood powering it, because that's not why any of the readers signed up to receive it. We also haven't leaned super heavily in like aggregation and promoting different verticals. I think the Boost network in itself, when you have a high density of similar content creators, they can all benefit by recommending each other, boosting each other, and kind of like the rising tide lifts all boats. But we don't have like a front page of like beehiiv.com/finance. And here's our 5 favorite finance newsletters. I think it's really tricky when you get into.
I don't think you should. As I've talked to it, Phil, you know this because I built Trends with Friends, which is an early version. What I'm trying to work on with Tyler is like, I don't think it's Tyler's job to tell you which are best. I think it's the curator's job, meaning Howard Lindzon or Trends with Friends would love to promote the top 20 beehives, right? And I need to build a beehive front page so that all the traffic, instead of me charging per clicks, I want the writers on Trends with Friends to have a Beehiiv page, and the readers that are in love with that writer can directly sign up for that email. And Tyler, I've been pitching you this for a while. Do you like that idea or no? But yeah. Do you agree with that idea?
I think the idea of giving someone the control to be able to aggregate themselves on behalf of their own publication and build that and aggregate writers is very different from us doing that. So I think directionally that's fine. Even what you said in Beehiives, like that's a total difference. And like people call their newsletter Substacks or like Substack pages. It kind of goes back to the Amazon Shopify thing where Substack is the brand. They're the aggregator. They're the app. They're the ones who are sending notifications on your behalf, even without you knowing, because they are trying to boost their overall network as a publisher. So people launch Substacks. We like intentionally don't say like launch Beehiives. Like it is totally your publication, your blog. We are tools, infrastructure, monetization, growth. Like we want you to succeed. We don't want Beehiiv to be front and center whatsoever.
I love that.
Yeah, I love that too. So that's where we're going, JC. That's where I think the future is in that curation. And we brought Josh over. Josh is now on Beehiiv, so that's cool. And Josh didn't do it because of anybody. He just did it because it's the best product. So, all right. So let's get to the markets and then maybe even look at a couple of the email companies. But Phil, JC, take it away.
Perfect. The most interesting charts in the world. Every month, JC is the master of monthly charts. So we have a few that he's that he just sort of threw in there. JC, why don't you take us through those?
Yeah, I mean, listen, I think there's a common theme out there of leaders that have already exceeded those former cycles peak. If you want to scroll down to the new all-time highs in the S&P 500 and the Nasdaq 100, these are the highest monthly closes in history. One thing we know for sure about downtrends is that You don't see a lot of new all-time highs in downtrends. Like, we just know that for a fact. So while the S&P and the Nasdaq are making new all-time highs, there's a theme. There's an underlying theme out there of a lot of the most important areas of the market are just now returning to those former cycles peak, late 21, early 22. And as you can see here, the equally weighted S&P 500 and equally weighted Nasdaq are a great example of that. We are just now, over the last few months, now coming to those former highs for the first time and really struggling at those levels. And if you scroll down, you can see the same thing in cryptocurrencies, Bitcoin, Solana, Binance, all back to those former cycles highs and struggling there for the last few months. So again, a big theme. You could see it in the XLF, which is the US Financials Index. You could see it in the XLV, which is in the US Healthcare Index. You could see it in materials, which is the XLB. Now, here are the Fab Five. There are 5 charts that are all above the prior cycle's peak that would lead me to believe that a lot of these other charts, like Bitcoin and Solana and the equally weighted S&P and Nasdaq and materials and healthcare and financials, I think ultimately they're going to break out too, right? Because I'm looking around and seeing what some of the leaders have been doing when they approach those levels. So I got 5 charts for you. Again, all of these are monthly candlestick charts. Number 1, technology. This is a third of the S&P 500. It's half the Nasdaq 100 above those prior cycles peak. You can keep going. The next chart is the broker-dealers index. We don't have bull markets without financials. People who are telling you that the stock market is rigged, maybe it is, maybe it isn't. But if you're convinced the stock market is rigged, why wouldn't you just invest in the companies that profit the most from the rigging, right? And these are the companies in the broker-dealers index, all making new highs above the prior cycle's highs. You can go to the next one. Number 3 is industrials. Of all the S&P sectors, industrials are the ones that have the highest correlation with the S&P 500. Of all the sectors, it's industrials. So you can argue tech might be the biggest, financials might be the most important, but if math means anything to you, industrials are actually the ones that move the most with the overall market. Again, above the prior cycle's peak, and I got 2 more for you. So as you can scroll down, you could see semiconductors and industrials. Of course, semiconductors, I don't need to explain to you, Nvidia is about to become the biggest company in the world, approaching $3 trillion as we speak. Can't have any technology without chips. Again, you don't need me to tell you, but I double dip with technology and semiconductors. I understand there's semis in the tech index, but that tech index is a lot of Apple and Microsoft. And Apple and Microsoft are not in the semis index. So I include both of those in the Fab Five. And the last one is home builders. Consumer discretionary is making new 10-year lows relative to the rest of the market. This is consumer discretionary. So when you look at home builders, which are the leader within consumer discretionary, or one of the most important leaders above those prior cycles highs, that really stands out. So those are the 5 charts. If we're above those prior cycles highs, we've been saying it since January, it's hard to be overly bearish. Any corrections come within the context of a long-term bull market. That's why Phil asked me to bring, these longer-term monthly charts to put things in perspective. Any corrections that we've seen, and we certainly saw corrections. I mean, you can argue we're still in a correction, but, NASDAQ fell 8%, Dow Transports, Russell 2000, both down double digits, consumer discretionary down a whole bunch, regional banks down 16%. So you saw massive corrections. I shouldn't say massive. You saw legitimate corrections either through time or through price. You've seen it particularly in February, March, April. You can argue maybe we're still in it in some areas. But from a structural perspective, if these 5 charts are above the prior cycle's highs, I think that continues to be constructive for the overall bull market, which, by the way, is approaching the 2-year anniversary next week. 2-year anniversary of the end of the last bear market and beginning of the new one. So I think that this bull market still has legs. Again, any corrections we see, and we've seen them, and I think we keep seeing them, come within the context of that longer-term bull market, in my opinion.
Well, that was good. That was good. I mean, there's nothing to add. I mean, he's right. Like, it's a tough little market in that software within tech is getting schmeiced. Could be AI, could be, we don't know, but the whole sector is getting absolutely annihilated. So within tech, there is weakness. But thank goodness this year I'm indexing because my ideas have not been great. I think you guys know I'm the 3 Gs, Goldman, Google, and gold, which is kind of, those three have been right, but it's been a tough market unless you're indexing, right? Now the trends with no friends, which we'll get into at the end, there's what's working, it seems, are names that no one cares about, right? The hot names are correcting, and it's a whole new, take out the magnificent 10 or 12 or 15 or 8 top stocks, there's a whole new set of leaders, right? You weren't talking about Goldman or gold for 10 years. Now you can talk about them. Google was kind of the bastard child until recently, right? It was Netflix and it was Nvidia, but Google's kind of sneaking up. One question for you, Tyler, doesn't have to follow the markets. Do you index, or as you think about the markets, are you an indexer?
I used to be on Robinhood, just having strong opinions on things and slinging my money around, but I now just fully index. More so, time and a place when I was actually at Google or Morning Brew, and like working at Morning Brew, we were talking markets, trends all day long. I was more in it. Building the company takes 99% of my time, so it's just easier to throw it into an index.
But if you were like someone who's in email,
smart.
Yeah, it's smart. That's what Phil does. I'm starting to do it more. As someone who has opinions and is in fighting or positioning email versus the Web 2 world that was 10 years down this, like follow, follower, retweet, share. Is there a company of those that stands out to you as someone who's in tech day to day of the big companies, that if you could pick one, that's the one that you would go with?
Hard to say. I think you're pretty spot on with Google. I like for the shift in AI, even though they are perceived to be slower, they've been collecting every data point of what you've been doing on the internet for the past 20 years. I have a feeling that they have the firepower to really lead AI. And like, that's where, I got Google shares when I worked there. I'm not touching them. I think there's like a lot of flashiness and like obviously open AI and smaller companies that can move quicker because they don't have public markets and shareholders that they have to be responsible for. And you saw what happened with like Gemini. But in the long run, Google has so much data and talent. I would not bet against Google.
And JC, so I love those charts. Phil, what else do we got on the chart? Because I have nothing to add to what JC's saying. You got the trend is your friend here. And below those lines, we'll revisit.
Before the end of the
and
hour.
Above those lines, I think there's activity to do. Binance is breaking out to new 52-week highs today, for example.
Prison for 4 years, and the stock's at all-time highs. Yeah,
great. That's why that's why we don't follow. That's why we don't care about the gossip. That's why we don't care about the news, right? Because theoretically, this should not be leading cryptocurrencies higher, but it is.
Really
love
interesting.
it. I want to show you some. I want to get your take on some Jonathan Krinsky charts in 1 minute, JC. Before that, I just want to ask you, we have so many bears out there still. It's unbelievable. The market has just made new highs and then new highs. And you would think by now it would have squashed all doubters. However, the one thing I hear more than anything else is, it's all Nvidia. Nvidia's a bubble. And the market can't continue to climb on the back of one stock. I'm curious, given the charts you just showed us with the semi, the SMH especially, I'm curious what you think, how you would respond to that.
I'll tell you very simply, is Nvidia in the German DAX? Is Nvidia in the London FTSE 100? I know for a fact that the London FTSE 100 is 0% technology, right? So London FTSE 100, London FTSE 300, German DAX, Denmark, Stockholm, Sweden. I can go on and on and on. Japan. Look at Peru. Look at Chile. All of these countries are making new all-time highs. European banks are making new 6-year highs. Look at Greece, Italy making new 15-year highs. Prague making new 15-year highs. Does Nvidia trade in those indexes?
No. Ireland also breaking out.
Ireland also just got back to its 2007 highs. Does Nvidia trade in the Dublin exchange?
No, I think those are good points. Obviously, Nvidia is behind a lot of this because everybody feels excited that they can upgrade compute and AI. Where does AI on a day-to-day, for StockTwits, it's a really important part of what, how we're thinking about our own data. How do you guys think about it at Beehiiv as a startup? Is there any time to devote to it, or is it more just worry about it later?
Yeah, I think there's kind of like the marketing flashiness angle of like AI features for our users. So we have like an AI writer. You can build and like create and edit content directly within our editor. You can generate images. So that's like the consumer facing. Internally, we use it in a few different ways. Customer support, I actually think, is like an area of like where a lot of companies are going to start adapting AI solutions to read knowledge base, to read previous tickets, and be able to scale customer support beyond just hiring additional people. And then with like spam content moderation, that's something that you can seed a bunch of data to into different models and leverage AI. So those are kind of like the three different ways that we're looking at it. But I feel like every company is going to find and carve out a niche of something that they do where AI could probably benefit either CapEx or end user experience. But we're like not hardcore AI, obviously.
Okay, Phil, what were you going to say with regard to Krinsky, who had a couple good charts?
Right. So Krinsky posted this chart. The great Jonathan Krinsky posted this chart. SPX potential false breakout here. So what we're doing is we're taking JC's telescope, looking at the big picture, and we're just zooming in. We're going to grab a microscope, and we're going to take a look at the very recent action, sort of this month and last month in the SPX. This is Krinsky's chart, and he's just saying, hey, be a little bit careful here in June, in this month, and we're seeing maybe a false breakout here. Any thoughts on this chart, JC?
Listen, I love Krinsky. I'm pretty sure I'm the one who introduced you guys to Krinsky and his work. I mean, he's the man. Longtime friend of ours. I know he's an excellent golfer. I know Howard and him have gone out a few times. Krinsky, we have to remember what some of these people do for a living, right? Who are these people working for? And Krinsky, does a lot of mean reversion work, right? Like this is a lot of his customers. This is the type of stuff that they're looking for. So we want to understand that. Well, maybe other friends of ours might be more trend following in nature and less mean reverting in nature. So I think that's one thing. I don't think he's wrong at all. This is Brian Shannon 101 right here. From failed moves come fast moves in the opposite direction. And that's certainly possible. I'll go back to the first chart I showed you guys, which was the S&P and the Nasdaq on an equally weighted basis, just now getting back to those former highs and not so much breaking out, but and not failing either, just kind of hovering sideways. So I think that it speaks to that. It speaks to that underlying overwhelming trend in the market of a lot of these things getting back to those former highs, a messy market. And to your earlier point, Phil, about market sentiment, I think we're somewhere in the middle, which, by the way, sentiment is usually somewhere in the middle. Rarely is it at an extreme. And we want to really pay attention to sentiment at market extremes. I would argue sentiment is neither a headwind or a tailwind at this point. It's somewhere in the middle. Just to circle back on that.
So Phil, two things for me before I leave. I'll let Jake, because we know JC's got to hop and we'll end it. But two things that matter, right? I think JC's charts rule this market right now. Don't stand in front of these bigger trends, right? If you want to use divergences, etc., I think within this uptrend, I think as someone who's followed Krinsky for a while, yes, I think JC's right. As much as I like Krinsky, it's more subtle. What I think we're
tactical,
very tactical. What I think is the most interesting is software, right? What will happen? Will software lead semis down, or will the market pull? Will software stocks correct enough quickly that they start bottoming and then they start moving up while the rest of the world, the rest of the stuff catches up? I don't think we know, but generally, I think you got to be a little more concerned when huge software companies just can't get any traction. So we'll see. The second thing that I wanted to share is the speculation going on. We have this thing about the degenerate economy that we started. It's in full gear, right? Kitty is back. E-Trade's in the news trying to maybe kick him out, but share that FT chart. And I see this on StockTwits, right? So I'm battling with some characters in the penny stock streams. Phil, you saw this, that like the amount of speculation. And again, I think, like I said, it's here to stay in a world of speculation, but the top stocks of the last month, I don't know, what's it, 7? I don't know if you scroll back up, are penny stocks. So we're seeing a lot of real speculation. And that could just be, that speculating is just that much more a part of trading. And there's ways to play this. That's why in my ETF, I have CBOE and CME because they're, and Goldman Sachs, because those are the ways, if the game's rigged and feed Neo to the tuna, and speculation continues, I'd rather, instead of speculating on the actual penny stocks, own the casinos themselves. But it's something that worries me. Not that it's going to change my opinion on how I invest in the market, but generally this is not good behavior. Generally this is not smart behavior. And generally this is kind of late cycle behavior. But it's so prevalent, from Robinhood to Coinbase to zero dated options to the world being awash with cash, that it may just be a blip. This could just be a new normal. So we don't know. And I think overriding all these are JC's monthly charts right now.
And then also, let's remember what this is exactly. Throw up the EFT chart again. Let's just remember what it is that we're looking at. It's the volume of shares that are being traded that are under $1. To have any kind of exposure in these areas, you need to own a lot of shares. So there's a lot of volume in the share number. I'd love to see the dollar amount. My suspicion is that the dollar amount of shares traded in these penny stocks is a rounding error and doesn't matter.
That's the key point, is I think we've entered this world where everybody's having their fun, and it's kind of like not even interest rate sensitive. It's just slosh money that kids are just speculating.
Doesn't matter.
Yeah. And I think that's what used to be sentiment may just be a pocket of the world that just exists no matter what the hell the fundamentals are, which is just fascinating.
And the blockchain fixes this, Howard. This is one of the blocks, the odd lot theory of the Merrill Lynch in the 1960s is back. You can see it on the blockchain. Sure, the TradFi bros don't have that data.
What's the market cap of the entire microcap index? I bet it's smaller than Peppy-Coin.
No.
Yeah, it's in the small billion.
Doesn't matter.
And then
right, exactly.
Quick question to you, Tyler. When you hear blockchain and you thought about like Ghost and Mirror and people need to own their own data, how far is I always thought that was a little bit too confusing. So how do you think about that when you hear that?
Yeah, I think it's pretty true with just Web3 in general, that I think the user experience, like UI, UX, just isn't caught up with Web2 and what you would expect. So to have your fully distributed blockchain based content, you're syncing a bunch of Chrome plugins and adding a private key and adding it to cold storage. I think there's a lot of very interesting use cases for the blockchain. I don't think that the UI and UX is caught up to what normal consumers would want. We see people onboarding onto Beehiiv, which is as straightforward as it gets, Web 2, and they still have dozens of questions, right? Yeah. So I think it is a little bit ahead of its time, but I think the underlying tech is pretty interesting. I think Mirror just merged with
one thing that you guys are doing that is sort of mirroring, not decentralized, but sort of mirroring the decentralization trend that I love that you were describing before, is that you're sort of backing out of the picture. So it's not like, hey, this is Substack, or this is whatever platform that you're on. We're providing it and we're in the background, and you own your emails, you own the platform. When people get the email, it's from you, it's not from Beehiiv. There's a similarity there. I mean, it isn't decentralized, but it's as if decentralized.
I mean, if you read Chris Dixon's recent book on Web3, SMTP is the OG decentralized protocol, right? So we have built our entire platform on top of email, which is decentralized by nature. So as far as it is, again, as we were talking about earlier, the complete opposite of a social media platform that is fully aggregating and owning the distribution and algorithms. we are built on email, which is, the OG decentralized. So
it's the OG. Email is the killer app. I know, JC, if you have to hop, but we'll end it with this. Phil, we can do a few trends with no friends, but email. The thing that's fascinating to me is, and I think that Tyler and a lot of young founders have to remember, it's not just building a great product. Another advantage of what Tyler had was the cap table, right? Like your weapon or the weapon of your own destruction can be momentum in the cap table. Well, Substack's biggest problem is their cap table, right? Is the pressure of having that much capital on their cap table. And you can see it in their product. They're trying to be all things to all people because they've raised so much money. So it's Beehiiv is also a lesson. And the markets themselves are lessons, as we've seen with these, the small caps trading and all the meme coins being built on Ethereum and Solana. Well, that chart didn't even have Solana. Is that there's many ways to skin the cat, but like protecting your momentum and staying within your, not getting too big too fast and kind of managing your cap table is another advantage that a lot of these companies can have. Because eventually you do have to answer to TAM. Eventually you do have to answer to growth. Even Salesforce, right? A small miss in their number for the first time in 72 quarters, stock's down 30%. So eventually, and that can be a very long time if you manage it well, eventually you have to, the valuation does matter of your business. So
we've talked about this a lot, Howard. It never hit me until right before we raised our Series A, which we raised 12.5 million at 65. We had an exit opportunity in front of us, and it hit me for the first time when having that dichotomy of options of the exit, which is great for seed investors, great for me, great for the co-founders, or take additional capital. As soon as we hit that $65 million valuation, we just knocked off hundreds of players who can no longer afford us if we are going to have a successful exit. And you just signed up for another 2 to 3 years to continue to grind to reach that $300, $400, $500 million valuation. And so to your point, when you raise at a $650 million valuation like Substack did, you have to take some massive swings that could cost, the early traction and product and users that you've already got, because you need to justify a $3-4 billion exit. So, we just raised at 225. We are on that path, but I'm also I don't want to raise more money. I'm 0 for 3 in saying that and following up, but we run super lean. We're trying to optimize for building a scalable and profitable business, and very much aware of what the downsides of higher valuations mean.
But we were on that page. Phil, I talk to Tyler all the time about this. We were always on that page. It's like, don't do it. But then I always would be the guy that called him and said, now's the time to do it. Because if you build a great product, right, I can't fake it. Like JC would know if I'm pushing a product that he doesn't like, he's just going to either back channel me or he's just going to tune out, right? So I can't fake it. If I'm talking about a product I love and the product's not good, eventually people realize it, right? And so if you build a great product and have a great cap table, your phone's going to ring off the hook with investors because they're not tricked. They realize that it is a great product and they're inquisitive about what is the valuation. And the quickest way to kill all that growth is when people hear that valuation go, what the fuck? Like, people can do basic math, and math eventually matters, as it does in everything that JC and I talk about and you, Phil, talk about. And math matters.
I just did a quick little math. Stocks under $1 in America that are micro caps, $11 billion.
Yeah, so zero. Here. Less than the value of Pepe.
About the size of GameStop.
Yeah. So we're dealing with new numbers. So hopefully there's some good lessons there. Phil, anything else before we let everybody go?
Yeah, just talking about this valuation issue with Substack. Substack's a really amazing product. I use it. I'm going to switch. No, I just want a hat. That's all I want. I got a hat. I'll switch. Want the hat. But
I want a hat. Can I get a hat?
We'll send some hats around to the friends.
We got some. We got to get some hats.
We're simple. We don't need much. A hat, right. We're good. Maybe
that's all I got. Exactly. But just really quick. So they chased this thing, and I think they convoluted their product. And what I mean by that is like all of a sudden I got subscribers and I got followers, and I'm getting DMs now, and the app is different than web in fundamental ways. It's a convoluted product.
They're taking a massive swing, and if it works, what they're going for is the next Facebook or Twitter. It's very hard to do that. There hasn't been a new social network like introduced successfully in a decade. So they need to justify 3, 4, 5 billion plus. And the way to do that is to centralize, become an aggregator, push all of your readers into their app, and then start doing recommendations, DMs, feed. It's trying to take on Twitter, right?
Yeah, I remember seeing that product earlier, and I got pitched, and I loved I liked the guys at the time, and they had great. I mean, I feel bad because they had great investors at the beginning, true passionate fans, but that was that era, Phil, where the VCs came in. Price wasn't a thing because you're always going to be able to sell to a greater fool at a higher price. And that just goes to like, be careful who you listen to and be careful which momentum god you play to, because momentum is a mistress that if you get on the wrong side of it is very, very painful. Very, very painful to watch. And that's why we do these monthly charts and kind of have levels, because you have to kind of be aware of where you are in the food chain and where you are in terms of money management. So this is where these kind of markets play together, private and public markets. All right, we lost JC. Phil, anything else?
Well, let's just take it out. Perfect time to end. Oh, really quick. Trends with no friends. Riley sent us a great chart. It's just amazing how many underfollowed stocks out there, boring, just crazy boring, are crushing. I mean, here's one with 800 followers on StockTwits. Nobody follows it. The stream is pretty much dead. This is just a coal company that's making all-time highs here. No big deal. $4 billion market cap, Alabama mines. And look at that. I mean, it's just, do your own due diligence, but what more do you need there?
This has been happening for years. Coal got taken out of every index, and these are all 10 baggers over the last 5 years, and there's just still no supply. People want access to commodities and coal, and the only way to do it is people are doing, the real hard work is being done by people with just screening for coal names, and no matter what the hell it has coal in the name, it's going up. So like you said, be careful which ones you buy, because these have been going on for a while. But again, this is a 10 bagger probably with no followers. Any one other one? So these have been going on in our Trends with Friends, no friends list for a while.
That's the one. Right. We had so much to cover. Tyler, thank you so much.
Tyler, great job. Amazing. Keep it up. And
get us the hat.
Happy. We'll see everybody next week. Thanks for coming on, Tyler.
Yep. See ya.
See you.